Welcome to another episode of the Lightspeed Investing Podcast. I'm so excited to have Mr. Tyler Wood, head of the CMT, back here with us again today. Tyler, how's New York treating you?
Absolutely great, Philip. It's great to see you again, my friend.
Great to see you, man.
How's life in Kansas?
Life in Kansas is always amazing. I'm about to go out to the West Coast for another business trip, specifically Beverly Hills, and I'm already missing my hometown. So that's how much I love Kansas, man.
You and Dorothy both. That's
Yep,
awesome.
that's right. She was my ex, so. But hey, listen, I know you're a busy man. You're about to fly out to Dubai. So the
Yeah,
purpose of this episode today is to showcase for the listeners, right, if they did not know what the industry really is, right, that the CMT
sure.
is involved with, and also what exactly does the CMT actually do, right? So I'll let you go ahead and tackle these two common questions. And by the
Absolutely.
way, you may be listening, but Tyler has been very generous to incorporate visuals as well. So if you want to get the full experience, feel free to reference this on YouTube via the link. But the
Absolutely.
Lightspeed Investing Podcast on YouTube. But Tyler, I will go ahead and let you take the floor.
Thanks so much, man. Yeah, I always like to start with some pictures. We are
Okay.
in the field of technical analysis, which is a very visual form of industry analysis. And I always start with this picture, which was from our 50th anniversary on the floor of the New York Stock Exchange. Anybody who has CNBC on in the background is probably used to that shot from the floor of the New York. But we were brought there on our 50th anniversary because the New York Stock Exchange executives recognized the CMT community had tremendous impact on the industry at large. Things like market structure debates, construction of indices, and constituents that would be included. We've always been an ethical advocacy body, and so we work closely with FINRA, with what used to be the NASD, and other regulators around the world. So when your listeners are thinking about the financial services industry, they might be thinking about their portfolio or the brokerage company that they use or how they're trading. But if you think about how the investment industry grew up in this country, it started under the buttonwood tree with a few commodities traders taking the materials off of ships and trading before they left harbor. So there's a rich history of the financial services industry in Lower Manhattan, where our offices are. And when you see that picture of the organization celebrating the 50th anniversary, ringing the closing bell at the New York Stock Exchange, you might think we're a very large global credentialing body, and we are today. But over 50 years, we came from very humble beginnings as a community. And for those who don't know about the CMT Association, no, it doesn't stand for Country Music Television. I hate to break it to you. Chartered Market Technicians. And we really exist to advance the discipline of technical analysis. We do it all around the globe, and we've been doing it for many, many decades, over 50 years. Now, what I wanted to talk about today, Philip, and for most listeners, when they're thinking about how to make an investment decision, they might have heard the terms fundamental analysis or technical analysis. I just want to unpack the first layer of that onion, and maybe set a common shared vocabulary for how we talk about these terms. So we have to define technical analysis, and we at CMT Association take that as a very serious responsibility for defining the discipline for professional market analysts. So if I go back to the great books that were written in the 1920s, 30s, and 40s, folks like Edwards and McGee said technical analysis is really just the study of the action or the data that the market itself provides. So we're not focused on the company data, we're focused on what data can come out of the marketplace itself, the buying and selling of traders, just like our listeners on the podcast. But
Right.
we know there are other definitions of technical analysis. We know that it has to do with supply and demand relationships for securities or shares, any asset class. And we know that it is systematic. And I'm taking a quote from Perry Kaufman, who is a widely cited author throughout our curriculum. Systematic, you might be thinking about algo trading or programmatic. Well, the system or the set of rules, the discipline that we follow, it can be programmed, it can be driven by an algorithm, But even those who are completely discretionary need to have a set of rules or a plan, a trading plan in place before you enter the market. So you got to know how you're going to react. Now, if we're defining technical analysis, a lot of people just think, well, it's charts, right? It's data visualization, and there's a million different varieties of charts, ways that you can show all of that data coming out of the market, and that's true. The origins of our discipline, Philip, actually go back to the mid 18th century in Osaka, Japan. A guy by the name
That's
of
right.
that developed candlestick charts just by tracking the behavior of traders in the rice pits.
Yeah, that's why they call it Japanese candlesticks, right?
Correct.
Yeah.
Monehisa Homa was the name
Mm.
of that gentleman. Wrote a great book called The Foundations of Gold. And what he was trying to capture was a way to see intraday and throughout the week how prices fluctuated. And those Japanese candlesticks gave you tremendous information on who had control in the rice pit. Was it
Mm.
buyers or sellers? And today we still use candlestick charts. Got to pour one out
The
for
beauty
Monehisa
though
Homa.
is that today we can do it electronically because back in the day you actually be immersed physically on the exchanges. I think
Yeah.
they still I don't know if they still do that and they still offer opportunities to for traders to actually be on the trading floor. But I mean, to my knowledge, it used to take like an hour just to put your orders in, right? Because of the circulation of the phone calls.
That's exactly right. And there are still live traders on the floor of the New York Stock Exchange,
Nice.
really at the open and the close. They
Right.
still rely on that open outcry system, but it's very different from how it was in the
But the stock
1990s.
exchange, by the way, Tyler, right? That's more so fundamental analysis, right? Which we're really, I would say, in adjacent neighborhoods to, right? Because fundamental analysis, especially on the New York Stock Exchange, is the study of companies, right? The study of the CEO's quarterly earnings, things of that
Yes.
nature, correct?
That's exactly you queued me up perfectly, Philip. Most of the trading that happens at the exchange
Uh-huh.
is electronic these days.
Oh,
And
okay.
most of the electronic decisions are based on technical factors, not fundamental factors. Because keep in mind, the data flow does not change that quickly on the fundamental side.
Hmm.
So if we take our eye off of just data visualization, let's actually break it down. What is that difference between technical analysis and fundamental analysis?
Yeah.
And I'm going to use this graphic from Ralph Acampora. He founded the organization
Okay.
in the late 1960s, and he taught for over 40 years at the New York Institute of Finance. That's where all the traders from Wall Street went to learn this subject
Hmm.
matter. Now, back in the day, the mega cap security was IBM, but why don't we take apart Apple for just a second?
Sure. It already has a bite taken into it, so why not take it up
That's
for sure?
right. So if you're an investor, you might start your analysis by looking at the company, right? The company Apple. And they are going to, of course, have all of these different valuation metrics. You want to find out what's the intrinsic value of a share of Apple stock. You can use lots of different ratios: price to earnings, price to book, price to sales. I went through a whole MBA program to understand what all of those ratios mean. But the core idea, what's the value of the company? Beyond that, you're going
Uh-huh.
to look at the management team and you're going to assess whether they are really efficient or really inefficient at allocating capital throughout the firm. You want to make sure that the company is a quality company, meaning what is on their balance sheet? Are they in tons of debt? Do they have trouble servicing all that debt? Does their management team use resources appropriately throughout the firm? You might also, on the fundamental side, look at things like return on equity or margin expansion. This is the growth factor. From a fundamental perspective, if you're a growth investor, you want to find those companies that are beating earnings expectations every quarter. They have things like expanding margins or growing return on equity.
And that's return on equity or return on earnings. What would you say
Return
that was?
on return on
Equity, right?
equity.
Equity, that's right, correct.
And so you, of course, care about the products or services that that company develops and generates, right? That's going to create those future cash flows. When I was an MBA student, we spent a lot of time on DCFs and doing a DCF analysis, a discounted cash flow analysis, is to project what the company is worth based on an estimate of what all these new products are going to sell.
Okay.
So we're talking about Apple, right? We want to know how are their phone sales doing against other cell phone providers. We want to know
Okay.
about Apple's streaming services. How are they doing against Disney Plus? We want to know about how Apple's software is developing and whether their chips are going to be sourced from the right supply chains.
Yeah.
We also care a lot about competition, and that's a bucket of analysis that is tremendously complex. So we care about how Apple competes with others in its space, how Apple competes maybe on the regulatory front. Are they losing these legal battles for IP infringement about the
Mm.
Apple Watch heart monitor software? All of the things that might fall in that competition bucket.
And that sounds like a lot of research, right?
A ton of research, right? Now, as investors, unless you are a gigantic private equity firm, you're not typically buying the whole company, right? You, me, and all the folks listening are just buying shares of the company. So as you can see, we're only halfway done with our analysis, right? We
Yeah, I see.
have to look at the technical side to get a complete view of our investment. Now, if we're not buying the whole company, we're buying shares of their stock. So what do we care about? How about the price at which it is trading and the historical price that preceded where we are now? How about volume? Is the market participating heavily as an upside rally is taking place? Do we have volume behind? Is there conviction behind the move? We might look to the options market or in futures, look at open interest, right? Does this have low float? Is there a high short interest position? Maybe that's telling us this is topping out, coming to the end of its rally as short sellers line up. We care a lot about the supply and demand relationships, not just for shares of Apple, but how about shares of the sector, the information technology sector of the S&P 500? How is that sector compared to other sectors of the market? We might care about the industry group. We might care about US equities. Is there a lot of demand for US equities, or is all of the money flowing to European industrials and defensive stocks right now? Or do equities not appeal to institutional investors at all? Is
Right.
the demand for commodities or cryptocurrencies or you name it greater than it is the demand for equities? So we have a lot of supply and demand relationships that we want to consider. And that last piece, psychology. And this is where I think, Philip, the technical analysis discipline really captured my imagination because everything in the top half of this graphic, all the fundamentals are very complex. Each bucket, we can do tons of research, and they're built on estimates, right? So we have these things which we think we know about the company, but
Uh-huh.
I'm not sitting in the closed door sessions of the management team
No.
at Apple,
Yep, that's right.
uh, right? We can listen to the earnings call, but there are things that we might agree we don't know about the company.
Well, probably a lot because you were not part of the internal team.
Right. How
Yeah.
about all the things that we don't even know we're unaware of? And there are
Right.
countless examples, right? You can look at Enron's story. There were shenanigans happening in the CFO's office long before any of us found out. But market price, that single, simple, elegant variable, will tell you long before the story of why has come
Mhm.
out. It will tell
Well, and
you.
then on top of that
Oh,
too,
go ahead.
right? Through trading electronically, it's direct access to the markets, right?
That's
It
correct.
literally like the whole, I mean, a whole picture is being painted right there in front of you. And all you have to do is choose buy or sell. And you could be a very lucrative and wise investor
Yep.
or otherwise, right?
So what Ralph will tell you, what every chartered market technician will tell you is that this one variable, the market price, is taking all of the known and unknown information from that top half of the graphic, everything we know about the fundamentals, and factoring in the emotional bias or the psychology of market participants into one simple variable. So Apple may have done nothing wrong, right? And nothing fundamentally changed at that company between April 1st and June 1st. But the month of April and May, we've seen tremendous volatility, and there's a lot of psychology wrapped up in how investors feel about potential looming tariffs, about changes in the global supply chain, about whether or not the product prices are going to be increasing, and what is on the horizon for these mega cap companies like Apple. That psychology is very hard to quantify, but it shows up in price. So you have this really powerful, very simple and elegant variable that
Mhm.
you can use to your advantage. My colleague David Lundgren on the CMT podcast says that the best fundamental analyst on the planet
Yeah.
is the market. And so every morning he comes into work and he checks in with Mr. Market, his fundamental analyst, and says, "How are we doing today? Right? What's the new information?" And price will tell you how investors, not only what the information is, but how they're interpreting that information.
Gotcha.
Yeah.
So I guess for the CMT, right, which hosts different kinds of services, what is the number one thing that you guys do to serve the public?
So we are a credentialing body first and foremost. When you are looking at fund managers or when you're reading research, if they have a chartered market technician designation after their name, it means they've successfully completed all three levels of this very rigorous examination program. It also means that they abide by our standards of practice and ethical conduct. It means that they engage in continuous education. So there's a credibility factor to the CMT designation, but we serve the professionals of the financial services industry to help advance that discipline, share understanding of how professional technical analysis works, how people can use that to their advantage, and hopefully make the investment space a much safer, more efficient place for every participant.
And Tyler, if you had to just kind of hone in, I know you use the word professionals, right? But like,
Yeah.
if you had to just hone in, like, who would you say it is the best served for, and who, when you're listening in, right? Because we cater to a multitude of audiences, who is
Mhm.
it not for? So that those listening can go, okay, like at least I have an awareness, and I know that this is either, a good path for me to look towards, or maybe this was just a good learning experience.
Absolutely. So the CMT program, the charter itself is reserved for those who have professional work experience, but the learning is open to all. And so for everybody who's got questions about technical analysis, who needs some help understanding this barrage of indicators that are on their charting platform, or maybe they have an idea about this concept of market
Mhm.
breadth or relative strength or volatility, and they just want to learn a little bit more, our mission is to help with that educational mandate, and so we have a ton of free content. It's at content.cmtassociation.org. Everything in there is free, and we're happy to share and introduce the public as well as the profession to these concepts in technical analysis.
I love it. I love it. Well, you certainly provided quite the information here today. I'm sure the listeners will learn a lot. I also learn a lot. So thank you so much. And I'm excited because I know in our next get together, we are going to actually do a deeper dive on certain indicators, right? The ones
Yep,
that you are your personal favorites, the ones that have been around not just the longest, but the reasons behind them, right? And kind of dissect those
absolutely.
conversations out. So, Tyler, I appreciate you for being here today. As I
Absolutely.
mentioned, I think you're gonna go to Dubai. We both have trips, so I bid you safe travels.
Thank you very much.
And until next time, we will talk more.
Sounds great. Thanks so much, Philip, and I'll see you real soon.
Absolutely. Thanks.
All
Take
right.
care.
Bye bye.